Team CMHC. Thank you.
Awesome. Thank you, Professor Reagan. Hello, everyone. We are Nimi, Nandini, Elizabeth, Ian, Shweta. And Nandini, welcome to our policy presentation sponsored by Canada Mortgage and Housing Corporation. We've been tasked to provide recommendations to the federal government to support the acquisition and preservation of affordable rental housing by nonprofit housing providers. The housing crisis in Canada cannot be understated. There are more than 81,000 households who are on the wait list for subsidized housing in Toronto alone, and some have been waiting since 2001. About 1.6 million Canadians are currently living in core housing need, and there are some Canadians who are spending almost 60% of their household incomes on housing expenses. Canada has the lowest number of housing units per 1,000 people of any G7 country, and that is not enough affordable housing to meet the needs of low-income and increasingly middle-income Canadian population. While these statistics are alarming, there are some solutions to the crisis. We have provided 5 recommendations for the federal government to support the acquisition and preservation of affordable rental housing by nonprofit housing providers. While these recommendations will not end the housing crisis, they address a key gap in Canada's current housing policy framework. Most of us are aware of healthcare due to COVID-19, and while we've been dealing with the global health crisis, another crisis that emerged with vengeance is housing. But what the pandemic also highlighted is how Government of Canada addressed COVID-19 with swift measures at an unprecedented rate. The same approach must be taken by the government to ensure a stable and secure affordable rental housing sector. We've seen nonprofits play an important role during the peak of the pandemic. Similarly, nonprofit housing providers also have a critical role to play in addressing the housing crisis today.
While Canada's National Housing Strategy, introduced in 2017 as the country's framework and rights-based approach to the housing crisis, aims to address supply needs, there are major concerns about the future of the existing stock of affordable rental housing. Housing researcher Steve Pomeroy has found that for every new rental unit created under the National Housing Strategy, 15 existing affordable units are lost. 322,000 units were lost between 2011 and 2016. The limited resources of existing housing providers and the increasingly tight housing market are leading to greater intervention from the private sector in purchasing and converting affordable housing into market rate units. While new construction will help in meeting the currently high demand for all types of housing, the loss of affordable rental housing is a permanent loss, which makes meeting affordable housing targets that much more challenging. This is where acquisition and preservation can come in. Acquisition and preservation, or acquisition for short, further out, wherein affordable housing is protected from loss, either to the private market or from deterioration, are strategies which can ease the loss of affordable housing. They present enormous benefits in the affordable housing space. They are a more economical approach to providing affordable housing compared to new construction, and offer shorter timelines as there are fewer construction and bureaucratic barriers. Given the current circumstances of nonprofit housing providers, they would be able to feasibly undertake more acquisition projects, protecting more affordable housing in a wider range of locations if given the right support.
While acquisition is the key focus of our recommendations, we do acknowledge that the housing crisis will largely be met by construction. However, acquisition will ensure that the existing stock is preserved. The gap between supply and demand is pushing up the prices of home. In the last year alone, home prices have increased by 20%, with the average home price being $816,000. With prices rising, more and more Canadians are unable to afford home ownership, lending them to the rental market. However, home prices also have an effect on the rental market. When the value of residential real estate increases, rents increase as well. For instance, the average rent for a 2-bedroom unit in Ontario is currently at $1,500. For those making at or below the median income, which was $39,000 in 2020, this rent is far from affordable. As can be seen in the graph, in the first scenario of an inadequate supply, the market price will remain out of the reach of many people, leading many people in the non-market housing. Even in the scenario when there is adequate supply, there would still be a need of non-market housing because a lot of the people would still not be able to acquire market rate units. In this scenario, it is essential that the federal government play a role in ensuring the supply of affordable housing, which would always be needed by those in need.
Why non-profit housing providers? Non-profit housing providers, in short we call them as NPHPs, are the second largest providers of affordable housing in Canada. Unlike the private housing providers, NPHPs are driven by a social mission, and they are more likely to provide housing to low-income individuals who often find it challenging to access housing which is at market rates. These include racialized communities, indigenous communities, people with disabilities, people with mental health issues, and the like. NPHPs in Canada have had a long history of providing affordable housing. They emerged as key partners in the mid-60s, and they continue to provide housing still today. Although government support for the NPHPs declined since the 1990s due to the federal devolution of housing responsibilities to the provincial and the municipalities, many NPHPs still continue to undertake innovative initiatives in the affordable housing sector. Several NPHPs, many prominent ones, are championing programs to support the capacity building of the sector, to support greater self-sustainability, and fund the direct acquisition of affordable housing units. While there are many diverse providers in the housing market in Canada, the private sector is going to be limited in its capacity because they are driven by their profit motivations. Similarly, government has its share of issues. It is dictated by resource constraints. There are challenges of navigation because of inter-jurisdictional issues. And the government and the private sector alone, they cannot be expected to provide answers to the affordable housing challenge in Canada currently. That is why NPHPs are a critical actor in the affordable housing space. However, many of them still face significant barriers in their operations on the ground currently.
These barriers are largely informed by the stakeholder interviews conducted over the past several months with NPHPs themselves and other experts in the area, and is supported by research on the topic. Firstly, there are disparate levels of capacities across NPHPs when it comes to skills related to acquisition, such as portfolio planning and capital management. Adequate funding is also a significant barrier for NPHPs in acquisition, especially given the challenges they face in accessing capital from the private sector. Further, there are challenges within the sector itself related to staff turnover, recruitment and retention of highly skilled staff in areas related to acquisition, making these projects more challenging to take on. Secondly, several of our stakeholders noted barriers in accessing NHS programs and funding. The applications themselves, underwriting processes and evaluation standards, and evaluation requirements were all viewed as presenting challenges and restrictions in some cases to nonprofit housing providers. Timely access to funds, an essential element for successful acquisition of affordable housing, especially in the private market, was often inaccessible from NHS programs given the highly competitive nature of funding allocation. As well, there is a distinct lack of national disaggregation in existing data on NPHPs and their operations. The siloing of data collection between government departments and other external organizations who collect data make it difficult for NPHPs and governments alike to understand the conditions of the sector and how the sector can be best supported. Further, it was noted that navigating different jurisdictions, and especially financial constraints at the municipal level, such as property taxes, put additional strain on NPHPs, especially those who are under-resourced and facing competing priorities. Finally, it was suggested that, more systemically, the stigma towards many communities that NPHPs may serve creates a level of distrust of the NPHPs themselves, furthering disinvestment of the sector and limiting the sector's ability to develop their capacities. While NPHPs are undertaking initiatives to address housing needs, the operations could be greatly enhanced to deliver more social benefits if adequately supported.
To support acquisition by NPHPs in a way that is responsive to the barriers they face, we have developed 5 recommendations on the themes of capacity building, intergovernmental support for NPHPs, and funding models for acquisition. Several options under these themes were considered, which we can speak to afterwards if desired. These recommendations address structural challenges. They could be implemented as standalone strategies or together to provide a systems-level approach to support the work that MPHPs are already doing and to build the sector to become more self-sustaining in the long run. While the strategies below will focus specifically on acquisition, they have also been designed with the opportunity to expand beyond acquisition to address other areas in which the government could support MPHPs. In doing so, the recommendations can be institutionally integrated and flexible to the needs of MPHPs as they develop their capacities and operations.
Our first recommendation is a rebalancing of the priorities of the Community Housing Transformation Center. The center was created in 2018 as a National Housing Strategy Initiative. It is an NPHP-led center developed under agreement between the founders, who are individuals with extensive expertise in the industry, and CMHC. They currently allocate 2 dedicated NHS funds through grants to community housing providers under various priority areas, with the mandate of supporting a resilient and sustainable community housing sector. Based on stakeholder interviews and examples from other jurisdictions, we recommend CMHC amend this agreement to give greater focus to direct service delivery of capacity building trainings and expert services on topics related to acquisition by ensuring a greater proportion of the center's activities are dedicated to this direct service delivery. Several countries with strong nonprofit housing sectors, such as the United Kingdom, have developed as such due to the degree of government support that they have received, enabling greater capacity development of the sector. We heard from stakeholders that NPHPs would greatly benefit from direct service provision to help them in building their independent capacity. In order for NPHPs to undertake more acquisition activities, they require the skills and support to do so beyond just financial aid. This agreement can be amended through mutual acceptance between CMHC and the center without legislative interventions. To begin this reprioritization, we recommend that the services and trainings be oriented towards acquisition, given the dire need to protect the existing stock of affordable rental housing. A centralized, national-level organization has greater opportunity to tailor these services to the needs and realities of NPHPs. Enhancing the professional capacity of NPHPs will provide the sector with the skills to undertake more acquisitions, expand their operations, be better able to navigate different government programs, and access private funds as a result of this enhanced capacity. Ultimately, this recommendation seeks to support a more self-sustaining sector that is less reliant on government support in the long term. This recommendation has been developed under several key considerations. As the center only recently initiated their activities, which were significantly impacted by the pandemic, promotion of the center within the NPHP sector will be a key aspect of this recommendation's success. The development of training modules and service frameworks will require administrative and operational effort, especially given the diversity of needs within the NPHP sector. As well, trainers and experts require a knowledge of acquisition, but also an understanding of the NPHP sector. Such requirements may pose a challenge in hiring and retaining the necessary individuals. Finally, the existing resources of the center must be considered along the potential demand for the services from NPHPs. If the center is not able to meet demand with its current capacity, additional resources may be required, either through additional funding or an increase in current NHS funds, both of which would require budgetary and legislative changes. Even if services and trainings are offered without grant applications, some providers may not be able to participate given competing priorities, limited time, and resources. Uptake may be slow initially, but this should be anticipated and not viewed as a program failure. NPHPs have received little targeted federal support over the past several decades, and their capacity has suffered as a result. Building this capacity is a worthwhile process, even with the time it will take, as the outcome will ultimately be a stronger, more effective NPHP sector.
To address the data gap within the NPHP sector, our second recommendation is to develop, manage, and implement a national registry of all NPHPs. Several countries like the UK and Australia operate registries to both support and regulate NPHPs to assist in creating a stable sector and offer favorable funding, access, and services. We recommend that a Canadian version of the registry be housed within CMHC to support institutional knowledge building. NPHPs would be asked to voluntarily register under the new system and provide information on an intermittent basis. This information would ideally be available to other levels of government and NPHPs when needed. While this recommendation addresses a gap in the sector, more broadly, this registry could also directly support the acquisition of existing affordable housing by tracking the stock operated by NPHPs so that any building that is up in the market to be sold can be flagged to other NPHPs. This centralized registry would allow both the NPHP sector and various levels of government to understand the sector better and identify the areas in which NPHPs could be best supported. The NPHP sector is broad and diverse, but without national level data, it is challenging for policies to effectively support the sector. We also recommend that in the long term, this registry could also be supported, could also be used to support the evaluation of NPHPs, as well as offer more favorable funding terms if NPHPs are pre-approved through the registry. This aspect mirrors what is done in the UK and Australia. However, we recommend this only to be implemented in the long term given some key consideration. For instance, the NPHP sector has largely been an unregulated industry since the beginning of its operations. Hence, establishing this registry could be a significant change in the sector. There may be a degree of unwillingness on behalf of the NPHPs to participate. However, several stakeholders we interviewed suggested that access to data that would be held within the registry is essential for the future of the sector. While CMHC should work to gain buy-in from NPHPs, there may be the option of making the registry mandatory through a legislative amendment to the National Housing Act, with the purpose of supporting housing research. For the same reason, we believe it would not be prudent to have the registry tied to evaluation or funding access when first introduced, as this may change the perception of the registry. Further, to prevent the duplication of efforts, CMHC should work to establish working partnership with other governments, NPHPs, and other entities who collect such data to develop a data collection standard. One of the biggest feasibility challenges is likely to be the capacity of CMHC to undertake this program. If limited, the expertise of Statistics Canada or other relevant third party could be drawn upon to operate the system while still housed within CMHC. Finally, it will be important to consider the ability of NPHPs to regularly provide information to the registry, especially given the barriers we previously discussed. While there is much to consider in this recommendation, but access to accurate, high-quality information is essential in growing and strengthening the NPHP sector. We believe, based on research, interviews, and case studies, that the benefits of the government and the sector would far outweigh the work needed to establish this national level registry of NPHPs.
To enhance the intergovernmental support of NPHPs, our third recommendation pertains to establishment of a pilot program in which the federal government essentially exempts the NPHPs from property taxes in approved municipalities by issuing an equivalent tax rebate. The municipalities would be selected on a predetermined criteria, which will be established after detailed research. This pilot could run for a period of, say, 5 to 10 years to see if this exemption offers sufficient financial benefits to the NPHPs. If the evaluation of the pilot finds it to be effective, it can be, of course, upscaled to other municipalities. To do so, the evaluation could be used as a foundation for negotiations with the provincial and the municipal governments to continue the program by offsetting the ongoing exemption through other alternative means. The federal government could also negotiate with the provincial governments to work out a cost-sharing arrangement, as is currently being done in the bilateral agreement framework under the National Housing Strategy. NPHPs are asset-rich but cash-poor. A property tax rebate will reduce the cost of operating their current affordable housing stock, ensuring that it is preserved in the non-market sector itself. Secondly, this will free up funds for new capital investments and new acquisitions. Improved long-term financial viability and sustainability of the NPHPs would incentivize more affordable housing in the housing sector in Canada. Property taxes can be as much as 20% of a building's annual operating cost. And to acknowledge this, already many cities in Canada are granting this exemption to the NPHPs. Toronto, Vancouver, to name a few. These cost savings enable the NPHPs to stabilize and maintain low affordable rents in the long run, thus ensuring greater access to the lowest income groups in these areas. Benefits aside, there are, of course, some considerations to the program as well. There may be a period between the end of the pilot program and the permanent exemption of property taxes, where the NPHPs may be expected to go back to payment of property taxes. NPHPs may, of course, find this challenging, and this needs to be accounted for in the program. Also, this exemption may not directly support the acquisition and preservation of affordable housing, as NPHPs have other numerous competing priorities, which can also likely benefit from these additional funds. However, if this recommendation is coupled with greater capacity building within the NPHP sector, it would help the NPHPs to focus their efforts, ultimately ensuring greater protection of the existing affordable housing stock. We do, however, acknowledge that this would be a resource-intensive initiative for the federal government. Gaining provincial government buy-in would also be essential because the long-term sustainability of program will depend on them. Ultimately, the success of the program would also be dependent on the willingness and the participation of the NPHPs themselves and the way, of course, in which they utilize these additional funds. However, there are already international examples that are doing this effectively. Denmark, Austria, France, they all have well-established intergovernment models of supporting the NPHP sector, where such tax exemptions are already being granted. This has allowed their NPHPs to develop and become more self-sustaining. Small interventions like these have the potential of providing the much-needed support to the NPHP sector in Canada as well.
Our final two recommendations propose two options for federal funding of NPHPs. The first option is CMHC-issued social bonds. Social bonds are similar to other government-issued bonds, but issued to meet a specific social goal, in this case, the acquisition of affordable rental housing. CMHC would issue these bonds on the wholesale capital market, with the funds specifically provided to NPHPs for acquisition. Proceeds from the social bonds would provide NPHPs with a reliable, continuous, and dedicated source of funding by offering lower-cost, longer-term loans. This will allow NPHPs to better compete in the housing market, especially against the resources of the private sector. By having CMHC issue bonds, essentially serving as a bond aggregator, NPHPs will save money on interest payments. Having a single government entity go to the bond market instead of multiple providers or provider associations go on their own is both more efficient and fully takes advantage of the government's backing. Social bonds provide a mechanism to bring private investment into the provision of affordable housing, with risk reduced by the government guarantee. Similar models have been successful in the UK and Australia. In Australia, just since 2018, they've issued $2 billion worth in social bonds, supporting roughly 15,000 new and existing units. In fact, the latest Australian bond offerings were oversubscribed, with demand outpacing supply. The Australian example was a focus of our report because of its similarity to Canada and how it stood up a social bond program quickly. As a growing number of large financial entities and investors become increasingly interested in ESG standards, these social bonds would offer a secure way to meet these goals while also providing the necessary funding to fill the gap in acquisition financing. As CMHC has bond issuance experience through the Canada Housing Trust, it has the skills and abilities to adequately implement this recommendation, making it a feasible option, although CMHC would have to secure legislative authority to issue these bonds. There are, of course, trade-offs in implementing a funding model on this scale. Unlike social impact bonds, which hinge on project-specific evaluations, it is harder to establish causality between social bonds and a positive impact on the social goal, specifically acquisition of affordable housing in this case. This more tenuous link may give investors pause or make social bonds more expensive. But in the Australian case, bond rates have tended to converge toward the standard Australian government bonds over time, demonstrating investor confidence in social bonds. Transparency and accountability can make up somewhat for the lack of a stringent evaluation process, as is found with social impact bonds. CMHC would have to show that the funds are being used effectively and not sitting idle. The Parliamentary Budget Officer has expressed concern with some NHS programs in that area. Given the currently high gross government debt to GDP ratio following pandemic expenditure, issuing new government debt may not be the most desirable option, so effectiveness is crucial. But social bonds offer significant benefits despite the additional debt incurred, and that should be considered when considering this option. The long-term benefits to society from a stable, affordable housing sector and more Canadians having access to affordable homes is well worth the initial cost.
Our final recommendation is the establishment of a revolving fund by CMHC to provide loans that would be exclusively available to non-profit housing providers for acquisition and preservation of affordable rental housing. The recommendation would require an initial investment by the federal government and is hinged on the idea that creating a fund solely dedicated to NPHPs so that they can receive loans at favorable terms. The repayment of these loans and associated interest would help maintain the fund in perpetuity. If this is implemented in conjugation with the recommendation on the National Registry, then loans from the revolving fund could be awarded to registered NPHPs who go through a pre-approval process. The fund would require only a one-time expenditure followed by minimal top-ups, thus not being a long-term resource-intense commitment. Philanthropic foundations engaged in affordable housing could also be expected to populate the fund. Limiting the fund's access to NPHPs would ensure that they have timely and easy access to loans. This would also improve the functioning of smaller nonprofit entities by removing private competition for this funding and potentially establishing an underwriting process that is tailored specifically to the realities of the NPHPs. Loans with more favorable terms would reduce the financial burden of nonprofit housing providers, making more funds available for their service delivery in housing. A dedicated fund for acquisition would result in less financial involvement by the federal government in affordable housing over the long run. However, there are some considerations that need to be reviewed. For the fund to be a success, it needs to have a significant financial contribution for a sizable number of nonprofit housing providers to access it. Given the current debt to GDP ratio of the government and projections of an upcoming recession, a viable source of funding is required. However, affordable housing is one form of investment that flourishes in periods of recession, and therefore it may have additional benefits that goes beyond the cost of initial fund creation. The success of the revolving fund would depend on the nonprofit housing provider's ability to pay back these loans. If too many NPHPs default, it would require more toppers from the government, which may not be feasible. Additionally, if the disbursement of funds is slow, then it could be detrimental to smaller nonprofit housing providers that do not have the capacity to finance themselves from other resources. In terms of feasibility, several countries have had success stories in operating a revolving fund. For instance, in the US, several jurisdictions use a revolving fund to finance NPHPs, where they can obtain loans from revolving funds if they need bridge financing, want to refinance at lower rates, or just need quick money to purchase units. Denmark too leverages revolving funds in its non-profit rental sector. These funds allow the sector as a whole to spread risk and pool resources over the course of 30 years, thus developing a long-term approach to financing. A similar approach and a model also exists in the UK. Given the financial focus of CMHC, there is expertise and ability within the organization to manage a revolving fund, and such a model is already being piloted by the corporation. This recommendation would require an authorization from Parliament under the Revolving Funds Act. As a Crown Corporation, CMHC is required to remit all profits back to the federal government at the end of each fiscal year, which currently prevents the corporation from keeping loan repayments in the fund. The fund would also have to balance the sizable disbursements required for individual acquisition and preservation projects with the small repayments maintained in the fund that would result from the favorable repayment terms offered to the nonprofit housing providers. However, based on our research, stakeholder interviews, and international case studies, there is huge potential for revolving fund to contribute to the overall development of the nonprofit housing sector. Housing impacts the quality of one's life, and its importance cannot be overlooked. With the growing affordability crisis, more and more Canadians, increasingly middle income, are being affected. Under the National Housing Strategy Act, Canada has the obligation to progressively realize its right to housing and ensure that all Canadians have a safe and affordable place to call home. Even if the current supply gap is filled, Canada will always need a degree of affordable housing to serve some communities. However, working towards this goal will require political will from the government, federal government, the only actor with the ability and the resources to make necessary changes that would benefit all Canadians. This report adds to a growing body of research that supports the efficacy of these recommendations. With the new mandate of the Minister of Housing and the existing research done by CMHC exploring options related to acquisition and preservation, there is an opportunity for such a strategy to become a central pillar of Canada's national housing strategy. There is growing urgency in Canada to protect the existing stock of affordable housing. So much has already been lost, and the time to act is now. Thank you. Yeah. You were 25 seconds over.
Well done, folks. Very well done. You had 1:20 to spare, so you can bank the time. Okay, you're first. All right, Natalie's first up for the judges. Take it away.
I'm first, and I just want to let you know that we have a broad audience online. We have over 25 people online, many from CMHC, and we also have many stakeholders that are online. So we'll ask our questions, but then I just wanted to kind of give a shout out to our stakeholders and our sponsors online that we'll be turning the Q&A over to them in just a few minutes so they can start preparing their questions in advance.
Perfect. Thank you.
All right. So my question is essentially something you just raised at the end, which was we will always need a degree of affordable housing. So I want to pick on that point and maybe highlight something that you mentioned in your report that you didn't cover so much in your presentation. You talked about many different jurisdictions, Denmark, Austria, UK, and in some of them you mentioned what was the percentage of housing that was financed by those federal governments. My question to you is, what is the norm? What should we as a federal government be spending on supporting financially affordable housing in Canada? And how does that compare to the countries that you looked at?
Well, there's a lot of country-specific factors that go into that. Are they a federal system, a unitary system? How strong is the private market? How strong is the nonprofit sector? So part of the reason we focused on the nonprofit sector was because there are a lot of countries that are more government-focused in their housing, but Canada has a mix between government and nonprofit in this space. I don't think there's really like a government should spend 30% or 20% or, pick a number. I don't think there's like a number per se where federal housing expenditure should be. But given its importance, it should be something that should be at the top of the list for, the next round of spending.
Okay. So I have two questions. I'll just put them both out there to you at one time. So the first one is you had a list of barriers from your research that you did, and then you developed the recommendations around those. Are there any barriers that you feel like you wish you could have addressed better, maybe? And kind of why is that? Like, nothing's perfect, right? So do you see any sticking points? And then the other question that I have is around what you see as the top two hurdles that might be faced in implementing the proposed recommendations.
So regarding the barriers, I mean, we did try to develop recommendations that addressed the barriers, but I think the one that we weren't able to touch on that I think is much more systemic across all aspects of the work that NPHPs do is the stigma and perception of nonprofits, but also just like affordable and social housing more generally. In other countries, such housing is not seen in the same way as it's seen in Canada. Like, it's something that, people of all incomes can have access to. But I think in Canada, there is a certain degree of perception. And this came up in a couple of our interviews and in the research. And this was something that, it's just not possible to really address that in like one or two recommendations. But I do think that in supporting the nonprofit sector so that they can be more effective, they will have more like widespread successes that might help in shifting that perception of the sector and making it so that not just the government but the private sector is willing to engage with that sector more, because that's currently something that doesn't really happen, engagement between the private and nonprofit. And then the other, I think, barrier that we didn't touch on as much in the presentation and more so in our report was just the barriers that nonprofits face in accessing existing NHS programs. So there are potentially options for changing how those programs accept applications from nonprofits, kind of the criteria that nonprofits have to fulfill. But that wasn't really something that we wanted to delve into, because we felt that there were like other options that could be explored to give more targeted support to nonprofits.
Probably I can speak to a second question. In terms of implementation, I think both the actors that we have considered in our recommendations, which is the Crown Corporation, CMHC, and the nonprofit housing sector, have implementation issues. So to speak about CMHC, anything that we want the CMHC to undertake, be it reallocation of funds or anything, just requires legislative and budgetary approvals. We have had extensive discussions with the current officials and, in fact, previous officials who have told us that even if it's like $1 million like wiggle room you need those kind of approvals from the federal government, the Treasury Board. So I think the biggest hurdle that we see in our recommendation in terms of the implementations, which we have dealt in detail in the report as well, is the budgetary and legislative approvals that would require again and again for the kind of restructuring and the systematic approach that we're trying for the sector to undertake. And in terms of the second actor, which is the nonprofit housing sector, as mentioned in the background and in the report as well, this is a sector that requires that capacity support. It doesn't have the resources, neither does it have the capacity. And so when you give implementation and recommendations of this sort that requires there's significant amount of time to be invested with the Crown Corporation, I think that becomes very difficult for them to really give that kind of constraints, because generally they work with a staff of like 10 members or 15 members, and to ask of them to sort of devote a significant amount of time in feedbacks, consultation processes for these recommendations would require a significant time commitment, which may not be feasible for especially the smaller entities which are implementation are trying to target. So I think in terms of both the actors that we are trying to see, both have implementation challenges, but given the kind of systematic and structural approach that we really want to undertake for this whole sector, I think both the actors would have to really get out of their comfort zone and come in and do the kind of changes that we would want the sector to undertake. Yeah.
Nadidi.
Thank you so much. Thank you for your presentation and the structuring. I really enjoyed reading it and applaud your efforts. But one thing that was glaring at when I was reading it is this whole issue of the assumption that because it's a nonprofit, it will always be affordable. And I'm wondering, and then equitable as well. And we've seen in many other parts of the world that nonprofits don't always translate. So all this subsidy and revolving funds and social bonds, where is the policy dimension to ensure that the nonprofits actually behave the way you expect them to behave, especially when it comes to equitable distribution of housing to those who need it the most, and avoiding of gentrification, which often happens, and then also ensuring that you actually keep the housing prices affordable. So where is that in the documentation and the analysis?
Thank you very much. I think, to be honest, the reason why we focused on nonprofit housing providers is because they are the second largest providers of affordable housing in Canada. But you rightly mentioned that, there's no way to kind of be like nonprofits will only provide equitable and affordable housing. There's a lot of bigger nonprofits that probably do not provide affordable housing, but in the policy, there is nothing, that pinpoints that, nonprofits will always, stick to this affordable housing, providing affordable housing.
So, one recommendation I was thinking through is, as you're providing all this discretionary funding and supportive funding,
how do you link it to that requirement? Do you understand? And so that's what there's a key issue where you're providing capacity and all the support and expecting behavior, but that behavior doesn't always result in what you expect.
Right.
And we're seeing so many nonprofits that behave just like for-profits, especially as they get bigger and richer. So it's just something that as I read through, was an issue for me. But maybe you can address. Somebody else has a comment.
Oh, okay. Go ahead.
So maybe I can pitch in here. I think the whole idea of putting the registry in place is also that currently we don't have any data about how many nonprofits exist, what do they do, whether they are addressing the issue of housing in particular or affordable housing within the housing sector. So one idea is, and we again take our case back to the international studies, there are countries like Denmark that have a very well-rounded, established regulatory system when it comes to nonprofits, even within the housing sector. They have something called a Nonprofit Housing Act that mandates certain obligations on part of the NPHPs. Maybe we can look at a scenario later down the line, but currently, as a team, that we felt is that currently the NPHP sector in Canada perhaps is not competent or capable enough to have that sort of a regulatory system in place, because if you subject them to a regulation too early, it'll maybe actually be counterproductive. So maybe we can look at a scenario like that, but that feedback is definitely well taken, that you need to ensure a regulatory system maybe that ensures that the subsidies of the government are doing what they're intended to do. Yeah, thank you.
Good question. Do you have another question, or are we going to sponsors?
We're going to go online. So what I would suggest, I see a few people from CMHC whose names I recognize. I see Leanne, I see Narusha from CMHC. So what we're asking those of you who are online, if you can raise your hand.
Surely we're not allowing Narusha to ask a question.
Well, I think we could maybe let Narusha ask us a short question. And then after those who are from CMHC who are online have asked their questions or shared their comments, I'd like to open it to, we have a range of stakeholders online from different nonprofit or federal advocacy organizations. So we'd love to hear their comments or questions as well before we open to the general audience in the room here. So what we're asking is if you can raise your hand, and then we will unmic you so that you can share your question. All right, we have somebody by the name of Thornton. So we'll just ask you as we unmute you to introduce yourself. Thank you.
Thanks. Sorry, yeah, the Zoom kind of sets my name for me. It's my name's Tyler Horton from CMHC. I'm the senior manager for the policy measurement analysis team. I just want to say great work. I mean, I've read your guys' stuff over the last little bit as I've been pulling it together. It's been really, really interesting to see it all come together and it's provided some really great insights, I think, for us. One thing that as I've read through it and then your presentation today, that sort of struck me and it motivates my question. Some of the recommendations that you've put forward require more of a holistic kind of review of the issue. This is not just a single issue. It's that there's many issues that come together to kind of form this overarching kind of problem. And also the way to address it is a bit multifaceted as well. I think it speaks to the complexity of the topic and trying to dive into this. If the government could do one thing right now, thinking about how this is the holistic framing that would have the biggest impact across this space, what do you think it would be, given your guys' recommendations?
I mean, that's a really good question because it's always something to consider because resources and abilities are always constrained. I mean, I think any of the recommendations could be like a priority. I don't know if there's necessarily one that is an overarching top priority. I mean, the work of the center is already meeting some of the gaps that the first recommendation would help to fill. But I think the thing that is most needed within the sector that was really reflected in our interviews was the need for funding. And currently, how NPHPs engage with the NHS funding is not meeting their needs. And so I think either a revolving fund or a social bond program that is dedicated solely for NPHPs would allow them to access funds quicker. For the NPHPs that have the ability to do acquisition, this would allow them to expand their acquisition activities. And then as the center develops and as potentially our first recommendation is maybe implemented, other NPHPs could access that funding as well. But I do think that there is a need just generally within the sector to access some sort of funding. They're not really able to get it from the private sector. And so accessing that funding from the federal government is really, really the best option, I think.
Thank you. Our next question comes from Leanne. So Leanne, we're going to unmic you, and then you'll be able to ask your question, and we'll be able to see your face as you are unmiked. Perfect. Thank you.
Hi, everyone. Just wanted to offer my congratulations on a job well done. Excellent job. It's been great working with you all over the last 6 months or so, and been great getting to know you. And I've liked living through you folks, and makes me envious of wanting to be a student again. So my question is a little bit less policy oriented, but I wanted to hear from a few of you as students, researchers, individuals, what may have surprised you the most about the housing situation in Canada?
We probably all have a different answer.
Maybe I can take it. So for me personally, I come from India, and maybe it was my naivety, I can humbly acknowledge that I did not expect the housing crisis in Canada to be so severe. And that was a big challenge to me. Why I picked up the policy challenge was because I thought it was a problem that kind of spoke more to my country back home. But as we went through the process of the research, the severity and the urgency of the crisis was what really, really shocked me in Canada. And the numbers that we came up with were quite shocking. So that's my personal take on it. But thank you so much since you asked.
Now that we are offering opinions, I might as well offer mine as well. No, I mean, just generally researching about the housing crisis. I mean, of course, there is one in India as well, and I come from India as well. But I think the most shocking for me was how exactly are rents so high in this country. Like, I mean, there has to be some kind of a balance. So like in India, I mean, of course, housing costs are like huge. Like if you purchase a house, it's like really you have to break a bank or give your kidney or something. But then given the rents, I think it's so much more affordable in India. There is not conversations about affordability crisis in the rental market in India. And just to see that here, it was beyond shocking for me that if so many people are into home ownership, it's like 35 to 40%, how exactly are being people pushed into the, rental affordable market? And it's just going through the roof. So I think just to see that imbalance and about the supply which a developed country like Canada faces, I think that was just gave me an insight that I couldn't have got if I wouldn't have done the project. So, and in any way, it is just not comparable to what I've seen before in the housing crisis. And I wanted to take away something that could be applied to my jurisdiction in my country, but I think it's just so different that I don't think so. Nothing is applicable there. So, yeah.
And I think something that I found very interesting was how we define affordability. It's just so random. Like 30% of your household income, and for somebody who is coming from a low income background, 30% for them and 30% for someone who is from a higher income background, it's very different. So how do you really define affordability that it doesn't affect, at such a severe level to the ones who are already marginalized? So that was something that's really interesting for me.
Okay.
Go, may as well.
I think for me, the most impactful thing was just how systemic the issue is. Like, this really isn't something, whether it's home ownership or rental or any aspect of the housing crisis, it's not going to ever be solved by surface level interventions. And I think that really informed our report a lot, because we really wanted to try to suggest things that got at the system changes that are needed. And obviously system changes are really hard, and it's not something that can happen overnight. But I think if the affordability crisis is ever to be adequately addressed, that degree of change kind of has to happen.
Ian.
I was most interested by kind of looking at the history of CMHC and of affordable housing programs in Canada, just kind of the ebbs and flows of what's been tried, what hasn't been tried, some stuff that's old is new again. and just how to kind of balance that, not reinvent the wheel, but also realize that some of these lessons have in fact been learned before, and to kind of bring those back to the fore.
Great answers. Leanne, I want to thank you for that question if you're still there. And I also want to say, Leanne, it's not too late to take a year leave of absence from CMHC and come and spend a year at Max Bell. I highly encourage you to think about that. Back to you, Natalie.
Our next question is coming from Narusha. So Narusha, for all of those online and in the room, please introduce yourself before asking your question.
Hi everyone, I'm Narusha. I was a McGill Maxwell Public Policy student 2 years ago. Now I work for CMHC. I've done this for 2 years. I actually don't want Leanne to leave because I'm going to start working for Leanne in a few weeks. So Chris, no thanks.
She can delay for a year, that's fine.
My question to the team is, given that I was in your shoes, I know when you first started coming up with the recommendations, I'm sure there was a ton more than 5. Is there anything that you've left out that you wanted to include, but you didn't for a specific reason? So I'd love to hear any recommendation that you kind of thought through, but you just decided it wasn't feasible, and why?
I'll just start with one. I think that's a great question, and our report has, for every recommendation that we considered, we had 2 options. So if there were 5 recommendations, we had close to 8 other options that were considered. So I could just maybe speak for, say, capacity building. While we finally recommended that there should be a rebalancing of the priorities of the Community Housing Transformation Center, the other 2 options that were considered was just giving more grants to the Community Housing Transformation Center so that they can continue doing the kind of work they're doing, which is just giving grants to nonprofit housing providers so that they can, undertake training. And the second that we considered was that the CMHC develop a brand new center under its corporation that specifically deals with capacity building. And so given the kind of constraints that would have required, the kinds of resource commitments and the huge process of getting a legislative approval to get a department under a corporation, we really did not consider that. And considering that grants are generally one-off things, and as we have spoken again and again about the systemic approach that we are taking, we did not think grants were another thing that we could just, give and expect the center or the nonprofit housing providers to sort of go and do their work. So to have like an overall uniformity in the quality of training that they get, and to have that training reach to all the nonprofit housing entities, it was considered that our final recommendation was considered. Maybe if others want to talk about other options.
Yeah, sure. So in terms of municipalities and the barriers that they face, we consider 2 other options. One of them is the right to first refusal. Like we know in Montreal, there is any property that is up for sale, it can be flagged to a nonprofit sector or anyone, and they can decide okay, do you want to sell it to anybody else? Do you want to shift the ownership to somebody else? So in that way, the affordability can be maintained. That was one option, and the other option we also considered is the new program that is suggested, that was proposed in the budget, which is the affordable housing. Which one was this?
Housing Accelerator.
Yeah, a Housing Accelerator Fund, which is particularly for building new units. But we recommended that maybe it could be considering that the policies are still in the works. We recommended that maybe it could also consider acquisition and preservation once it's finalized. So those are 2 other options that we considered for municipality barriers.
Okay. Are we done with sponsors? No? More?
Well, we have some stakeholders online. So
Okay.
Marlene Kofi, I think I pronounced that correctly, has a question. So Marlene, if you can unmute yourself and ask your question.
Hi, everyone. It's Marlene Coffey from the Ontario Nonprofit Housing Association, and it's good to see the team again. Congratulations on your presentation today. It's so wonderful that you've included us as your sector association in Ontario. So much of the policy conversation is often around retention and renewal and expansion and supply. And the question that I have for you today is really about the recommended funds that you have presented today and how those might be applied to the acquisition part of the equation, which of course would help us as a sector bolster supply. So I'm wondering if you could just suss out a little bit around your recommendation and how that can help with the acquisition of existing assets that we might be able to bring on into the community housing system.
Thank you. So I'll take the example of our social bond recommendation. Under that, social bonds are issued, proceeds come in, CMHC would then turn around and provide you with a loan that has better terms than offered elsewhere, and you could use that. That would provide you the upfront money you need to make that purchase. So it's an on-lending type situation. I mean, that's the very basic version. I don't know if you were looking for a more specific element there or not.
No,
Sorry.
I'm happy to listen to your recommendations and really see how we can push and pull on certain levers that we need as a sector to add to the supply part of the equation. Thank you very much.
Now, Natalie, where are we?
We have another question from the center, so I'll ask the center to introduce themselves before asking their question.
Hello, my name is Lisa Kerr. I'm the Deputy Executive Director of the Community Housing Transformation Center. Team, you were fabulous. You did an outstanding summary of what was a very clear, concise, and I think multifaceted strategy, which I greatly appreciate. I know it's very typical to ask what priorities you would assign, et cetera, but what I appreciated was that you thought through quite a range of solutions and presented them again in a very clear and well thought out manner. So kudos to you for doing that. I think very interesting. The center obviously is very interested in some of the recommendations, particularly as they pertain to us. But I was going to ask the question that Leanne asked about what surprised you, and I loved your answers. So thank you for that. But I guess it was more, my secondary would be around the promotion of nonprofit housing as a solution to many different things that ail us as a country, and notwithstanding the fact that there appear to be nonprofits I'm not aware of who are behaving like for-profits and making lots of money. I'd love to know who they are. But that said, I think I would like to hear more about what types of promotional activities you think would address stigma such as it exists in this country in such a fashion that is, for us, shocking and also extremely counterproductive to solving the housing crisis.
Thanks for that question. And it's one that needs to be considered, and it wasn't like a strong core aspect of our report, but I think one of the ways in which nonprofits can be better promoted is through more like clear government support. When governments, I mean, we see this with the reason why social bonds are so effective is because they have government backing. And if nonprofits are seen to the general public and to the private sector as having that government backing, I think that will help to enhance some of their credibility and make them better able to work with other partners to tackle much more challenges than just acquisition. And I think that giving nonprofits the support so that they can have successes, like having wins, is important to the nonprofits, especially if they're not very visible within the public. And if we can increase the likelihood of nonprofits having those wins through offering more affordable housing and helping more people get out of housing need, I think that would also help with the promotion of nonprofits. Yeah, I mean, there's no simple answer there, but I do think government support and having the necessary resources is important.
Thank you very much.
We don't have any more questions online, but we are running out of time. So maybe another question from the room?
We're down to the last 2 or 3 minutes. So are there any questions from the general audience here? If I said there were 10 minutes left, would you have a question? I have a question. Oh, yeah. So, and it comes to the municipality thing and the tax rebate thing. So my question is about obstacles and about the stigma and perception thing that you mentioned. So I'm wondering, to what extent did you learn that one of the problems is that municipalities don't want to build social housing because of the perception and stigma. And so was that a problem? And are those incentives going to be changed or even worsened, perhaps, with the property tax rebate that you're proposing?
Yes, we acknowledge the fact that there are perceptions about, and we kind of, while we were researching, we did come across not just one barrier that exists at the municipal level when we talk about NIMBYism. These are all issues that are real issues and that probably need more political navigation than policy navigation. But in terms of the property tax incentive, there is existing research within Canada. Like many of the municipalities are already doing that, and we understand that it is effective. In fact, in Alberta recently, a 10-year property tax exemption was actually withdrawn because I think the municipality was trying to toy with the idea of extending grants. That has been not taken so nicely by the nonprofit sector because they say that it makes a difference. So it dents their bottom lines and it helps. And in fact, we couldn't, because of the paucity of time, show that calculation. But there is an existing research that shows that does work as an incentive to hit the bottom line and make it more operational for the nonprofits.
I can believe that the tax rebate helps the
NPHPs,
the providers.
Yeah.
But what does it do to the municipality's bottom line?
Yes, so hence the pilot program for offsetting by the federal government.
Okay.
Right, because we do understand the municipalities in Canada currently, and property tax is their main source of funding. Like anywhere between 30% to 60% of property tax of the municipal revenues actually come from property tax. That is why we didn't want to just leave it at granting that exemption, but it needs to be patched up by the federal government.
So it's the federal taxpayer helping the city
it
pass on to the provider, who then hopefully,
addresses
if Nadidi's concerns are addressed, pass it on in the form of lower rent.
Yes, that's the idea. But maybe not for in perpetuity. Hopefully, in the long run, we may not require that to become a permanent thing. That is the idea.
Okay.
Thank you.
Anything else?
Maybe just some parting thoughts from those who were online. So Emily Paradis says congratulations to the whole team for your presentation. Very well done. And Stephanie Lowe from the Aboriginal Housing Management Association in BC says you've given her much to think about. Thank you.
Okay, thank you all. Thank you, team. Great job. Great job. So well done for bringing your own cheering section. Well done.